All right, if you're even thinking about buying a condo, or heck, if you already own one, you are going to want to listen up. Two of the absolute biggest players in the housing market, Fannie Mae and Freddie Mac, just dropped some major updates to their rulebook, and it could have a real impact on your wallet.
I mean, that's the million-dollar question, isn't it? With housing affordability being something on literally everyone's mind, Fannie and Freddie have rolled out new policies that are supposed to help. So, let's break down exactly what's changing and what it actually means for you.
And look, the people in charge are not mincing words. That's a pretty powerful statement from the head of the agency that oversees Fannie and Freddie. They're basically saying, hey, that old rule, it was broken, it was expensive, and we're here to fix it with some good old-fashioned common sense. So first off, who are Fannie Mae and Freddie Mac? Well, think of them as the giants behind the curtain of the mortgage world. They don't lend you money directly, but they buy mortgages from the lenders who do. And because they're so huge, they basically write the rule book that almost everyone else has to follow. So yeah, when they change a rule, the whole industry snaps to attention.
Now, to really get why this solution is such a big deal, you have to understand the problem they were trying to solve. Turns out, one single insurance rule was creating a massive bottleneck for condo communities and buyers all over the country, especially as insurance costs started to go nuts.
And here it is, the culprit. The old rule demanded that condo buildings have this super premium gold-plated insurance that would cover the full replacement cost of the roof. Now that sounds great in theory, but imagine you're in a building with a 20-year-old roof. Getting that kind of policy was becoming incredibly and sometimes just impossibly expensive. And that kicked off this really nasty domino effect. High insurance costs meant higher condo fees for everyone. But here's the real kicker. If a building couldn't afford that specific policy, poof! The entire building was suddenly blacklisted from the normal mortgage market. That meant you couldn't get a standard loan to buy a unit there, locking people out and making a big chunk of available housing just disappear.
Okay, so that was the mess. A rigid, expensive rule just jamming up the whole system. So what's the fix? Let's check out the new playbook.
The magic word here is flexibility. This is the single biggest change. The old rule was all or nothing, full replacement insurance for the whole building, period. The new rule says, okay, hold on. For the roof, and only the roof, condo associations can now choose a more affordable type of coverage. Everything else in the building still keeps that top-tier protection.
So what on earth is actual cash value, or ACV? It's actually pretty simple. It just means the insurance pays for what the roof is worth today, with its age and wear and tear factored in. So yeah, if you have an older roof, the payout would be smaller, but the insurance bill is a heck of a lot smaller too.
Now compare that to the old requirement, replacement cost value, or RCV. That's the Cadillac plan. The storm hits, boom, you get a brand new roof, no matter how old the original one was. You can see why requiring that for every single building was so expensive and why making it optional just for the roof is a total game changer.
And they didn't just stop with the insurance part. They basically looked at the whole process and said, where else can we cut some red tape? So they made the rules around deductible simpler. They made it easier for some buildings to skip this really intense financial health checkup. And they even tweaked the rules on how many investors can own units in a building. The whole thing is an effort to make the process a lot smoother.
Okay, I know, that was a lot of technical stuff. But now, we get to the part you really care about. What does all this mean for your wallet and for your options as a buyer or an owner?
And we are not talking about a small change here. This is massive. The industry estimates that these changes are going to open the door for tens of thousands of condo units to become eligible for normal, affordable financing again. Entire buildings that were essentially off limits for most buyers are now back in the game.
So let's connect the dots here. If you already own a condo, this could mean lower insurance premiums for your building, which could translate to lower monthly fees for you. And if you're trying to buy a condo, well, all of a sudden you've got way more options to choose from. More choice usually means more competition, and that is a real step toward making housing a little more affordable for everyone.
So, the rule makers clearly see this as a huge win. But what does the mortgage industry itself think? Well, the reactions have been mostly positive, but with a few important buts.
You have the Mortgage Bankers Association, a huge voice in the industry, coming out with some strong praise. They're basically saying, finally, this is meaningful progress. They feel it directly tackles those overly rigid requirements they've been worried about for a long, long time.
But it wasn't a total love fest. Another group that represents smaller, community lenders said, okay, we love the insurance change, that's great.
but were a little worried about getting rid of some of those other financial checkups on buildings. Their concern is that without those detailed reviews, you might be introducing new risks into the system. So it's a more nuanced take, for sure.
So what's the bottom line here? It's pretty simple, really. By making insurance rules more flexible, the goal is to lower costs for homeowners and, just as important, to unlock tens of thousands of condos that were previously off-limits to buyers. It's a very targeted move to get more housing options on the market.
And all of this brings us to one last big question. This is a significant step, and it's aimed squarely at affordability. But in the kind of complex, challenging housing market we're in right now, is a change like this going to be enough to really make that path to homeownership clearer for more people? Well, that's something we're all going to be watching.